Welcome to Smart Stock Watch. It is March 3rd, 2026, and we are breaking down a major retail report that just hit the wires this morning. Target has released its fourth quarter and full year 2025 results, and the market is reacting to some surprising numbers. Joining me today is John, senior analyst here at Smart Stock Watch. John, Target has been under the microscope lately. How did they wrap up the year?
Thanks for having me. It was a pivotal year for Target. While the headline sales numbers show some of the challenging year CEO Michael Fiddelke mentioned, the underlying profitability and the strategic shift toward non-merchandise revenue are the real stories here. They managed to navigate a tough consumer environment and are signaling a return to growth for 2026.
Earnings beat and analyst forecasts. Let's get right into the bottom line. Analysts were forecasting an adjusted EPS of $2.17, based on a survey of 13 experts. Target blew past that with an adjusted EPS of $2.44. John, that's a significant beat. What drove that outperformance?
It really came down to disciplined cost management and a better-than-expected margin profile. Even though GAAP EPS was slightly lower at $2.30 due to some non-recurring business transformation costs, the adjusted figure shows the core business is much healthier than the street anticipated. They are finding ways to squeeze more profit out of their existing sales base, even when the top line is under pressure.
Revenue trends and digital momentum. Turning to the top line, Q4 net sales came in at $30.5 billion, which was a 1.5% decrease year over year. Comparable sales were also down 2.5%. Is this a sign of a weakening consumer, or is there a silver lining in these numbers? And which categories were actually moving the needle for them during the holiday quarter?
Food and beverage, beauty, and toys were the winners. We also saw essentials and home start to trend better compared to what we saw in the third quarter. It looks like the consumer is still spending, but they are being very selective about where those dollars go.
Margin expansion and operational efficiency. One of the most impressive parts of this report was the margin expansion. The gross margin rate rose to 26.6%. How is Target managing to keep more profit per sale in this environment?
They are winning on the operational front. They reported lower inventory shrink, which has been a massive headache for retailers lately, and lower supply chain and fulfillment costs. This offsets some of the higher product and import costs they faced. For the full year, they did see some pressure from markdowns, but the fourth quarter showed they've regained control of their inventory levels.
Strategic growth, membership, and Roundel. Target seems to be evolving beyond just a traditional retailer. Their non-merchandise sales grew over 25%. John, can you explain the significance of the membership and advertising numbers?
This is the next chapter Michael Fiddelke is talking about. Membership revenue more than doubled from a year ago. When you lock a customer into an ecosystem like Target Circle 360, their lifetime value skyrockets. Additionally, Roundel, their digital advertising business, saw double-digit growth. These are high-margin revenue streams that aren't as dependent on selling a physical box of cereal or a toy. It's a very bullish sign for long-term profitability.
2026 Outlook and CEO Confidence. Looking ahead, Target provided guidance for 2026 that seems fairly optimistic. They are expecting net sales growth of around 2% and an EPS range of $7.50 to $8.50. What's your take on this outlook?
It's a confident guide. The CEO specifically mentioned that February saw a healthy, positive sales increase, which is a great start to the new fiscal year. They expect to grow net sales in every single quarter of 2026. They are also looking to expand their operating margin by another 20 basis points.
If they can hit the high end of that $8.50 EPS guidance, the stock looks very attractive at current levels.
Key takeaways.
To wrap things up, Target's 2025 was a year of transition, but they ended on a high note with a massive earnings beat and a clear path for 2026. The growth in digital and membership services shows a company that is successfully adapting to the modern consumer. John, any final thoughts for our viewers?
Target is proving it can be profitable even when sales are flat. With the 2026 recovery already showing up in February's numbers, this report should give investors a lot of confidence. They are also continuing to return capital, paying out over $500 million in dividends this quarter alone.